Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Tuesday, October 8th, 2013. What we have here today is kind of a pretty sloppy day across the board. We're going to change things up here a little bit and look at some of these major charts first, and then we'll take a look at the internals as well as the different indexes. But here are the ES futures. The ES futures made a new low close on the move. Didn't make a new absolute low on the move, so we didn't expand the range to the downside, but we did make a new low close on the move. A little key feature here is we do have a sloppy candle here where we gap down on the day, and even after the gap down was partially recovered, we did close below the open. So even after there was kind of an absence of selling during the midpoint of the day where they were able to walk things back up, they came in and did put some pressure on the market to the downside. Key support is going to be last week's low at about 1663, 1664. Resistance is going to be the 6/8 level, which is roughly coincident with the EMA. That's the 10 EMA there. Moving on to the NQs. The NQs are still in this lateral pattern here. They're actually holding up fairly well because there's been some pretty good pressure on the market. We'll look at the Dow in a minute. That's been really heading down with some pretty good velocity, but the NQs still hanging there with relative strength. We do still have this negative candle on the chart here where we closed below the day's open even after filling the gap left over from Friday. So negative candle here, but we didn't really break to the downside, so that's a small win for the bulls here for sure. Moving on to the Dow, this is where things are really pretty sloppy. Made a new low close on the move and a new intraday low, so we expanded the range to the downside and made a new low close. Losing this 4/8 level at 15,000. We haven't really lost it until we follow through to the downside below yesterday's low. We haven't done that yet, so that remains to be seen. But this 4/8 level is going to have some pull to it for sure. If we do continue to the downside, probably the most important level to watch near term is going to be the static trend line, where the cursor is right now. It's about 14,780. So that's going to be real important support where we pivoted off of for this 9-bar run to the upside here. If the bulls can get something going tomorrow and turn this thing around, resistance is going to be the 10 EMA, which is about 15,140, 141, somewhere around there. Taking a look at the oil futures. Oil was really weak intraday. We're down about $2 intraday. They did circle the wagons and kind of bring it back up in the area of the 10 EMA. It's still pretty sloppy, and we're kind of on the lower fringe, or the lower cusp of this trading range that has busted to the downside here. If we do break lower, we're going to have some pretty good support here at the 4/8 level, at the nice round 100 level. Upside resistance is going to be last week's high, coming in about 104, just under 104.5. Gold today had a little bit of a bid, but a very tepid flight to quality. We're still just barely kind of just gaining this 10 EMA, so there's really not much of a pattern here. This overall downward bias is still intact. We're still below the 50 DMA, and the 10 EMA is essentially lateral right now. So just kind of sloppy trading in the gold market with not a lot of conviction either way, especially on a flight to quality basis. Moving on to the TLTs, we had this little 9-bar run to the upside here. We're above the 50 and just kind of lateral here with the 10 EMA right now. So we're in this little lateral range. We are short-term positive, but this thing hasn't really turned up yet and really developed any real momentum. The MACD is still positive and above the 0 line, but really hasn't shown any kind of real bid. There's obviously no flight to quality here. People are a little bit unsure of what to do right now as far as the bonds. So right now, you can see from the money flows and whatnot, they're essentially just kind of standing pat here. We had a little bit of positive money flow here, and right now we're just kind of neutral at best. All right, we're as far as the price action goes today, we talked about the Dow that expanded the range to the downside, made that new low close. But the individual sectors here, let's take a look at these ranked from best to worst. The XAU is the top gun on the day, showing a little bit of flight to quality. That actually outperformed gold. today, which is notable. So we see if gold will start to catch up. So right now it's starting to bid up the XAU a little bit. BKX is just kind of middling today. It gapped down and closed fairly weakly. This actually doesn't reflect the right price. The utilities were kind of a little bit of a safety haven. They definitely outperformed the broad market for sure. The bottom of the barrel today was the BTK. The BTK took a pretty good hit, gapped down. It was kind of sloppy trading. There really weren't a lot of setups to play there. Unfortunately, looked at a couple today, but really nothing materialized today. The internet index was fairly weak, and I think that's notable because there was a lot of selling in the high beta names: Facebook, LinkedIn, Google was sloppy. A lot of the high beta names were kind of under pressure today. May have to do with kind of preparing for the Twitter IPO, but a lot of lack of bidding at best there in those high beta names. Transports are down about 1%, which is more or less in line with the broad market. So really not a whole lot to be learned there. The only thing here is the oil index and the kind of the energy names were a little bit better than the broad market. And that's kind of the one thing that the bulls can point to say, hey, things may not be that bad. All right, so here's a look at the how the futures did, plus the Dow and the internals. We're down about 1% across the board. We talked about how Nasdaq didn't break to the downside, while the broad market did, especially via the Dow Industrials. So we're gonna give today's price action a D minus. Not going to give it an outright F because the Nasdaq didn't release to the downside and didn't resolve that range. So for now, it was definitely poor for sure, and the Dow was very, very weak. But we're just going to give it a D minus because the Nasdaq side is trying to circle the wagons here. Internally, the market gets an F. Minus 1,750 issues on the New York side, minus 1,200 on Nasdaq. And the VIX took a huge pop today. It was up $2.50. So it was up like 15%. So internally the market was very, very weak. That big pop in the VIX might be a little bit of a divergence. You might say that okay, now they're putting on a little protection, and now that they have the protection on, maybe we can turn up, and that's very possible. Don't forget we've got that 4/8 level just below in the Dow, which is going to be key support. One of the classic things to see at top or bottom is you start to see that divergence where the price action is very poor, but the advanced declines aren't that bad, indicating that things are just kind of washed out. The selling's already been done. Now they're starting to nibble. And the same can be said at a high. At a high, you can have excellent price action, but the market internals on an advanced decline basis are barely positive. But at the same time, you can flip that around. You can have that climactic high or that climactic bottom where it's just so good that they can't improve on it. If you take a look at the market preview for the individual stocks, the scans weren't that negative. In fact, they're a little bit to the buy side on balance. So this could be one of those days where we could have a little capitulation, a little semblance of towels hitting the floor, people giving up on things today, and definitely seeing a little bit of evidence of that in the VIX. The only thing was if you're going to see that climactic bottom, one of the classics is to see that big spike in the put call ratio, and today we closed at 9.25, so we're nowhere near that climactic spike. Here's a graphical look at the total put call ratio. You can see that we're well away from that 1.25 climactic reversal threshold where people are just gobbling up protection. So while the VIX was elevated today, they were really just asking for more in premium rather than just a stampede of put buying. We definitely didn't see that here in the put call ratio today. And here's a look at the Dow Gold ratio. Definitely have this bit of a downward bias right now from the last few days. But while the futures, as far as the Dow or the individual or the other major equity indices like the Nasdaq or the ES side have been weak, there really hasn't been a whole lot of flight to quality. People trying to pile into gold. Gold's just been hanging around. So this ratio really hasn't changed too much. This ratio will slope down pretty aggressively if stocks are going down and gold's going up. But right now, it's really been just stocks heading lower without a rotation into the hard asset rate. Okay, got to give credit where credit is due, and that is the NDX versus the SPX. Here's the cross ratio chart. Still holding up pretty well with strength in the NDX. If you look at this on the weekly basis, still in that comfort zone here. This old channel, we're not up into that overbought area up near this upper green line. So still hanging tough here as far as the NDX goes with that relative strength. So no real cause for concern here. Not seeing a reversal warning from this just yet. All right, now drill down a little deeper. Here's a look at the SOX versus the NDX. Got this key breakdown that we're still below, but we are kind of hanging here. We've definitely made better off of this swing low. Still have a little bit of a positive bias. So even though we had some pretty poor price action overall, the very economically sensitive semiconductor names have been performing fairly well, and we're pretty highly ranked on the overall sheet today. So here's just kind of like this is like the game within the game. We looked at the NDX versus the S&P. The NDX tends to lead the S&P when you move to the upside. Here's a look at the SOX versus the NDX, and the SOX is actually holding up pretty well so far. So keep an eye on the semiconductor issues tomorrow. Qualcomm just started a bounce. That would definitely be on my list. We played Ciena long today, made some money there. So keep an eye on the semiconductors and play the relative strength when you see patterns develop. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.